Good evening and welcome to today's market report. Let's start with the key numbers. The Nasdaq closed at 25,838.94, up 2.02%. The S&P 500 finished at 7,365.12, gaining 1.46%. The Dow Jones Industrial Average settled at 49,910.59, up 1.24%. The VIX Volatility Index ended at 17.35, essentially unchanged. The 10-year Treasury yield stood at 4.35%. The dollar index broke below 98, closing at 98.01. The offshore yuan traded at 6.8136 against the dollar. Bitcoin was at $81,342. WTI crude oil settled at $95.88 per barrel, while spot gold held above $4,707. Today's market was characterized by a clear risk-on rally with a probability of 85%. The capital flow direction was extremely clear. Geopolitical risk premiums were systematically stripped away, causing massive capital outflows from crude oil and other safe haven assets, with funds pouring into technology growth stocks led by semiconductors and cyclical sectors benefiting from AI infrastructure expectations. The market completed a rapid shift from risk aversion to risk seeking. Asian markets were the trigger point for today's global optimism. South Korea's Kospi index surged more than 6.5% to an all-time high, with Samsung Electronics skyrocketing 14.4%, becoming the global leader for the semiconductor and technology sectors. China's A-share market, on its first trading day after the holiday, opened sharply higher driven by the triple resonance of external sentiment, domestic liquidity with the central bank injecting 300 billion yuan through reverse repos, and continuous northbound capital inflows for 8 consecutive days. The Chi-Next and Star 50 indices significantly outperformed the main board. European markets fully absorbed the Asian optimism without any turning point, with major indices in Germany, France, and the UK all rising more than 2%. When US markets opened, sentiment was further amplified. AMD's better-than-expected earnings report, combined with the collaboration news between Nvidia and Corning, completely ignited the AI infrastructure narrative. The Nasdaq hit a new all-time high led by technology giants. However, it is worth noting that the VIX Volatility Index remained essentially unchanged against the backdrop of the Nasdaq surging more than 2%. This is a bearish signal that the market ignored. Typically, a strong stock market rally is accompanied by a significant decline in the VIX. Today's stagnation indicates that a large amount of capital is still hedging tail risks, and the market still harbors some doubts about the final implementation of the peace agreement. From the perspective of the triple linkage, today presented a textbook risk-on resonance. Stocks surged, bond yields fell from above 4.4% to 4.35%, the dollar index broke below 98, and the yuan strengthened. This combination of rising stocks, rising bonds and falling dollars has a strong positive spillover effect on Asian markets tomorrow. It means that the global liquidity environment is becoming more accommodative, which is favorable for emerging market assets, especially interest rate-sensitive technology growth stocks. Today's strongest capital direction was the information technology and semiconductor sector, driven by the triple positive resonance of AMD's earnings beat, Nvidia's partnership news and falling interest rates. The materials and industrial sectors also performed strongly, benefiting from expectations of new infrastructure construction such as AI data centers. The energy sector was the weakest, as geopolitical risk premiums were rapidly stripped away, leading to a sharp decline in WTI crude oil prices. Looking ahead to tomorrow, we expect Asian markets to open higher to digest last night's US gains. However, technology stocks may experience a pullback after the sharp rally due to significant short-term profit-taking. Meanwhile, after WTI crude oil's nearly 5% single-day plunge, short sellers will have a strong incentive to take profits. There is a window for technical repair below $95. But the ADP employment data to be released tonight is the biggest potential disruptor to current optimism. If the data significantly exceeds expectations, it could quickly reverse the market's dovish expectations for the Federal Reserve, causing Treasury yields to rebound and putting pressure on technology stocks. In conclusion, today the market completed a rapid shift from risk aversion to risk seeking. The AI computing and semiconductor main line has been upgraded from an industry trend to a deterministic main line driven by the resonance of macro and industry factors. Until this macro combination is reversed, investors should continue to be bullish on the technology sector in Asian markets. However, given the consecutive sharp gains, it is not advisable to chase prices at current levels. We recommend controlling positions and waiting for a pullback or consolidation before re-entering.